Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. Equity markets across the Asia-Pacific are trading somewhat cautiously on the first session of 2026. Volumes today will likely be thin. We have a number of regional markets shut for holiday, including Japan and China, and South Korea had a delayed opening. Joining me now for a look at what we see on the horizon is Bloomberg's Paul Dobson, executive editor for Asia markets. Paul joins us from our studios in Singapore. Thank you for being here. Happy New Year to you. Last year, global equities posted their strongest year since about 2019, and I'm curious to get your take on what you're hearing in terms of the outlook for equity markets in Asia this year.
Yeah, so I think that globally the sentiment remains relatively positive for equities going into the new year. I think that Asia's markets fared pretty well, partly with the dollar weakening as a sort of like people spread their bets a little bit wider than just the US. That helped lift Asia's markets. And Chinese equities in general seem to get some positive momentum from the AI story in particular and advanced technological developments more broadly as well. So there was a little bit more positive sentiment there too. That being said, you know, the fact that we've had decent gains does leave valuations looking a little bit more stretched. We saw some doubts, for example, in South Korea, some wobbles after its extremely strong gains this year. So there is a little bit more of a hurdle to overcome in terms of that valuation and in terms of the outlook. So more positive news is likely to be needed in order to continue to keep things on an upward trajectory.
So you mentioned South Korea there. Talk to me a little bit about what we learned the other day with the export data. I think the semiconductor arena was particularly strong.
Yeah, still looking strong for South Korea, and that's a good kind of guideline for the rest of the region. If South Korea is doing well, then it tends to sort of mimic the other tech-heavy centers, Japan, Taiwan, and China in a sort of more roundabout way as well. So I think that that's interesting in the context of the Trump tariffs that we've seen this year. Of course, in the middle half of last year, there was concern about how damaging that was going to be for the economy, particularly across Asia. But so far, most places seem to have ridden that out pretty well. So, for example, in Singapore today, you know, we had final GDP numbers for the year looking strong as well, despite it being a kind of global trade center and very much dependent on those flows. Part of it seems to be China's ability to reroute its own exports more towards Europe. That seems to have helped, and also the kind of using more Asian nations as a transit hub as well. But nonetheless, it will partly depend on how strong that US consumer remains and how much that appetite for imports, despite the extra costs from the tariffs, will be through the year ahead. Korea, of course, you know, as you said, though, tech heavy, and so that also ties in with that AI story much more strongly too.
So we recently got the official PMI data for China. The bright spots seem to be on the manufacturing side, with factory activity expanding for the first time in 9 months. I think the official PMI reading was just above 50.1. Was that a big surprise?
It was an upward surprise, certainly, relative to where analysts were looking for it. I think there was a little bit of cynicism about the number as well, given, you know, kind of the positive sheen that it puts on things going into year end. Nonetheless, you know, China's exports again have held up reasonably well. That's not really the concern. The concern is still that domestic demand side of things and whether there is the potential to kind of rebalance the economy a little bit more in favor of the consumer this year. Now, what we've seen in terms of the support for that is a continuation of their trade-in program, a little bit like the US's Cash for Clunkers program. So some more money being pledged for that into the start of this year. And, you know, the government will continue to talk about that, but it still seems to be emphasizing more advanced technologies and industry as being the real engine for growth and for competitive sort of global standing as well into the year ahead.
So, Paul, when it comes to technology in China, a lot of the focus in the IPO market has been on the chip makers. I think we have another IPO today in Hong Kong. This is the chip designer B-Run. It's trading for the first time today, right?
It was trading higher in grey markets before official trading begins, and it was several times oversubscribed, more than several times. It was very heavily oversubscribed. So we have that one going off. Most of the recent sort of mid-size IPOs, I guess you would call this one, have gone off pretty well and seen decent first day gains on the Hong Kong Stock Exchange. And so, the expectation is that this will be a continuing trend. And there's more Chinese mainland companies pipelined to list in Hong Kong in the coming year. Today we heard that Baidu's AI unit is looking to do similar. And there's also more technology companies in mainland China looking to do first-time IPOs as well. So strong enthusiasm for that, to get that cash in to continue to fuel that development and growth in the sector.
So we also had the sales target released from the Chinese EV maker BYD. The company met. What do we know about where BYD is now relative to Tesla, let's say?
I was looking at those numbers, actually. I was surprised, even though we know that the trend is established and that BYD is on and up, and Tesla's sort of seeing a little bit of a diminishing output at the moment. People looking for 4Q Tesla numbers, which should be released today, and expecting quite a big drop. And so the gap between total vehicle production and sales by BYD and Tesla continues to push higher, which sort of talks to, one, the cost advantages that Chinese companies have, and two, the popularity of those BYDs, some of them cheaper than Teslas, as a sort of alternative choice for consumers.
And we recently had the industrial profits data for China for the month of November, a drop of 13.1% year on year. That's got to be worrisome.
Yeah, worrisome. I don't know, you have to tally that off against the positive PMI data. I think that the fourth quarter was a little bit more of a tough one for China. But nonetheless, as long as those exports are holding up and there's still continuing demand in that space, then overall, Xi Jinping didn't seem particularly worried about GDP. It hit its 5% target, seems to be the case more or less for 2025. We're expecting probably a target of sort of just below 5% again for this year, most likely. And I think that talks to the idea that China doesn't feel that it needs to push particularly hard to drive stronger growth at the moment. And so, the policy support that we're seeing, yes, people are expecting some easing this year, but they're not expecting a whole lot in that space.
So when it comes to technology, we talked a little bit about the AI story. I'm also wondering about some of the big internet firms in China. Are there any reasons to be cautious on Chinese tech in the new year?
Great question. Well, it's competitive for one thing. So particularly among those platform companies in the food delivery space and that kind of thing, they've been trying to compete on market share by driving prices ever lower, and the authorities have expressed some dissatisfaction with that, seeing it as a sort of competition for the sake of competition rather than driving growth and innovation. So that's one thing that's definitely been holding them all back as a whole, and creating some sort of mixed performance that we've seen over that year. I think, the strength of the consumer is going to be a really big question that continues to hang over China, and that sort of, what we've been calling involution, that very strong price competition that's been hurting retailers more broadly, whether the authorities steps to curb that in various spaces, not just the sort of online retail environment, but right across industry in general, whether that can be successful. This time last year, I think, Doug, if you remember, we were talking very much about this idea of the Japanification of China. That sort of concern seems to have dissipated somewhat. It's still there as a sort of long-term worry, but it does seem like some of the measures that were taken in 2025 to address that were successful to a reasonable extent.
Paul, great stuff. We'll leave it there. Thank you so much. Paul Dobson, executive editor for Asia Markets at Bloomberg, joining from our studios in Singapore here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. In his New Year's Eve message, Chinese President Xi Jinping highlighted the achievements of China's large language models, as well as the research and development in semiconductors. Xi said that China has become one of the economies with the fastest growing innovation capabilities. Let's take a closer look at the tech story in China. I'm joined by Stephanie Leung, CIO at StashAway. Stephanie joins from our studios in Hong Kong. Thank you for being here. Can you describe for me the difference in the ways in which the Americans are approaching artificial intelligence versus the Chinese?
I think there's perhaps a philosophical difference in terms of the end goal, where the U.S. is pursuing versus where the Chinese are pursuing. And I guess if you look at the U.S. companies, all of them are talking about, when are we going to reach AGI? There's a debate on the timeline, but the end goal is the same, right? Everybody is sort of looking at that and seeing it as the grand prize. Whereas in China, there's actually no talk of AGI. In China, there's a lot of talks about, how do we use AI in manufacturing, in automating our factories, in producing robots, in enhancing manufacturing processes, in finding new drugs. So I think in China, the application of AI is the end goal, is the pursuit that the Chinese is going after, not necessarily having the best and the most intelligent model.
We've recently seen some pretty amazing IPOs for AI chip companies on the Chinese mainland, and I'm trying to understand how much of this is tied to enthusiasm or excitement for the actual technology, or whether this is more of an illustration of this casino-type mindset that may be existing in the Chinese equity market.
Yeah, I think anytime you put things into the Chinese equity market, there's a bit of both, right? There's a bit of the real story, the real investments, but also there's a lot of speculative sort of element, given that there isn't a lot of, I guess, outlets for capital to go to kind of get exposure in the Chinese market. But I mean, I think the government is actually very, very much determined to invest in the AI industry, particularly the chips industry, because if you think about, I guess the building blocks of modern industrialization, of kind of technology and enabled manufacturing, these AI chips is actually like the new oil, right? You need these AI chips to be able to automate the factories, to build the robots. So I think the investment into these AI companies or this industry is real. However, I think we need to, as investors, what we need to see is actually earnings growth and margins, right? And I think that's a big question mark in the Chinese industry, because if you look at kind of, I guess, how the government is pursuing industrial growth or kind of, I guess, economic growth and social welfare, they're encouraging price competition in a lot of industries.
At the same time, companies in China on the robotics side seem to be very, very aggressive. Is that a trend that you expect to continue?
Yes, definitely. And if you look at, I guess in the US, I mean, Tesla is saying that they will have commercial productions of robots, and autonomous driving is also a big part of this, right? So I think China definitely wants to be a leading player and wants to be a dominant player in this field. And if you think about the Chinese policy of economic growth, is still export driven. And this is a big part where China can produce a lot of advanced robotics, a lot of advanced drones, and I guess autonomous EVs, using its very, very cheap source of power and its sort of source of cheap chips and source of cheap labor. So this is going to be a very important strategic development for China going forward.
What about future industries? And I'm thinking about commercial space exploration, quantum computing. You mentioned kind of nuclear reactors. I'm wondering about nuclear fusion. Are these areas that are really top of mind, I think, for the government to try to invigorate and to help power the economy?
I mean, nuclear is already well into implementation phase. I think there isn't any question about just building up all these nuclear power plants to support the new economy of China. As far as I think quantum goes, there's a bit of I think a lower kind of emphasis on that, because as I mentioned in the beginning, right, the philosophy of the Chinese is to engineer the higher end application, like the manufacturing industrialization. And quantum, of course, there's been a lot of exciting developments, but still, it's still quite far away from being able to be applied to the industry. So I think that is not perhaps like what the Chinese government wants to pursue in the short term. But of course, if quantum computing makes a big leap and it gets into applications sooner, then I think the Chinese will be very, very quick to catch up.
What about space exploration or space travel of some sort?
Yeah, I think we're starting to see some applications of, I guess, space usage in manufacturing. and power kind of production. So, for example, in the US, I think there's been some ideas being floated as to bring data centers into space. I mean, that solves a lot of problems, solves the cooling problem, solves the power problem, because, I mean, you can actually get power from the sun like 24/7. And, I mean, space being, I guess, a vacuum place, it's the best for cooling stuff. So I think there's been some ideas being floated. As far as China goes, again, if we go back to the root of the China industrial production, it's always been about having abundant resources to be able to produce at the lowest cost at scale. So if we apply that lens to space, I mean, that's still not, I think that's still a bit far away from being able to produce at mass at low cost. So I think China, again, it's something that's definitely on the Chinese radar, but as far as like kind of making real investments, I think we're still some time away.
So we've talked about some of the reasons to be optimistic about the Chinese economy in the new year. Let's talk a little bit about the reasons to be pessimistic. And I'm thinking about the property market in particular. Is that still going to be, in your view, a major overhang for the foreseeable future?
Yeah, I think if we look at the data, I mean, property prices are still kind of falling, and there's no sign of a sustainable recovery. More importantly, if you look at the inflation data in China, mostly, I guess, for example, if you look at the PPI, it's still in negative territory. And given this kind of trend of price cutting and price competition going on in China, I mean, it seems like the government is actually okay with it. They're not looking to end the deflation cycle anytime soon. And as equity investors, when we look at kind of company earnings and revenues and prices, of course, I mean, that's in nominal value. So if an economy is still in deflation, I think it's hard for us to see like a broad recovery in the overall economy. And of course, property is still an overhang, not just from a kind of a data perspective, but also from a sentiment perspective, given that a lot of wealth is actually held there. Also, corporates have still fairly low confidence in the economy and in the sustainable kind of recovery, and that takes some time to recover.
Okay, Stephanie, always a pleasure. I hope you have a great 2026. Stephanie Leung is at StashAway, joining us from Hong Kong here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.